Well, time to get a move on to a corporate voice then and focus in on Manappuram Finance. There's been a sharp rise in provisions in the fourth quarter, and you've seen the profits come in pretty much in line with what the street was expecting. VP Nandakumar is the Managing Director and CEO Manappuram Finance, now joining in to break down the quarterly performance. Thank you for taking time out and congratulations, because it has been a healthy set of numbers. Let's talk about what really aided this solid jump in your profits, because the other income has seen quite a spike, nearly 260%. So what contributed to this spike, and is it a one-off?
No, the business last year had shown a sequential improvement. In our main business, gold loan, we have grown good last year sequentially. So in other businesses also our growth has been steady. So the overall the consolidated growth has been over 30%. So that and also the asset quality we were able to maintain. The mention about the provision is rather as a caution. The more is as a caution only, because the COVID provision is there. We always thought of taking a conservative view of things, and conservative way of provisioning much more than the RBI provisioning or the other norms also, all other norms also. But our provisioning is more conservative. That's the only reason for the higher provisioning. And towards the March as used to be, where the collection used to be very high in non-gold portfolio like vehicle finance, home finance, etc. As the March has been rather dull. Even from the very beginning, there were signs of lockdown in many places, particularly in places like Kerala, etc. The early signs were there. So from the second, third week of March, the collections were slowed down. That also has led to some increase in the provisioning.
Okay. Now, what about the share of the non-gold business? That has come down to nearly 33% from 34% on a QOQ basis. Earlier, you had mentioned that you were looking to increase the share of the non-gold business to nearly 50%. So, how do you see now the product mix shaping up?
Last year, because of the advantages of price as well as demand, the gold loan growth was much more than what was expected. So the non-gold, we have turned little more conservative, because we have witnessed some slowness in the various economic activities. So we are little cautious. That has led to a slower growth in non-gold portfolio. Microfinance also, we remained little conservative, because we have seen some challenges there in northeastern area. So in these areas, we had to slow down our disbursals. That is the reason. So so as the gold was scenario was better, that's the only reason we couldn't grow the non-gold portfolio during the last year.
Okay, just wanted to understand, what exactly are you witnessing about the lending environment as well right now? At a time when banks are getting risk averse, do you think gold loans theoretically itself would find more favor in the current environment?
Yeah, it should have been. But we have opened around 70% of our branches are operational now. What we have seen, of course, there is good demand for gold loan. At the same time, we see a lot of redemptions also. The people may wanted to monetize the gold. That could be one reason. And others also, because they were not able to redeem that during the last 1 month, etc. So the redemption pressure is also there because of that. So the demand for the gold loan is seen. I can't say that has come to the normal level. But it is subnormal level because the demand has not picked up. So the advantage of getting more gold loan in an environment of the lenders and the risk averse is not that seen now because of the lower demand.
Sure. What can you guide then for gold loan growth for FY21?
No, I feel like from the current trend, what I see is, during the first 1 or 2 quarters, we may not be able to grow gold loan. Third and fourth quarter, we expect some growth. So what we normally project is, our projections are around 10 to 15% growth in gold loan. So maybe during the third and fourth quarter we may grow by 7-8%. That is the prospects what I see today.
Glad that you can give us that clarity and stick your neck out. What about your NPA ratios? Because as I see in the balance sheet, they've declined on a sequential basis. But what about the absolute gross net NPA? And what kind of visibility do you have on your asset quality going forward?
See, in gold loan, we don't have, so gold loan currently is around nearly 69%. So we don't see any challenges in asset quality there. One reason is our gold loan tenure is 3 months, and we our online gold loan OGL it is around 60% now, more than 60% now. So in this online gold loan, regular transactions are happening. Even during lockdown days, the transactions are happening were to the extent of some 700-800 crores daily. So when these transactions take place, the interest collections are also taking place. So we don't see any chances for any credit loss there, the NPA there. Even now our interest receivable is around only 3%. Which is very low. So in other segments like vehicles finance, our collections are many of our customers have opted for moratorium. So through online the collections are coming now, but that is to the extent of some 40-45% only. So but I don't see any scope for a big jump in the credit cost. The reason is now the activities have started. Our lending is primarily to the lower end, that is light commercial vehicles and small commercial vehicles. These operators are active in the construction segment as well as the agri segment. Another major part of our portfolio is two-wheeler. That in that portfolio, as the customer profile is self-employed as well as salaried people, the collections are seen better. In housing finance, it is affordable housing. So the collections are much better now. It is seen around 60% plus. So the credit cost, I don't have much worry about that, but the chances are it may go up by 1 or 2%. That is our assessment as of the when we analyze the current situation.
Right. Okay, good to get in perspective from you on where the earnings visibility is, Mr. Nandakumar. Thanks so much for taking the time out and joining in today. That's the word coming in from Manappuram Finance on their numbers. Where are we for the market? Status quo, still struggling sub that 91.